Hello, everyone, and welcome to the GrowCast Show, episode 71. Today with me is Jayden Lee, who is an associate director at PropNex Realty. Welcome to the show, Jayden.
Hi,
And
thank
how
you
are you
for
feeling
having
today?
me. Yep, everything's fine. All's good.
Right, that's great to hear. And now let's start with our opening question, and that will be, what does being a property agent mean to you?
I feel that being a property agent, being in the line for about 3 years, is all about just, in a sense, having to see families, upgrade from their current place to their dream home, and having just being that avenue to help buyers nowadays in the market to achieve their dream home. Yep.
Hey, that's great. And what makes you different from other property agents?
I think I'll put it in a way as such that for my own personal values and everything, I do want to create a point whereby it is not just a transactional basis with my clients. And I really want to have long lasting relationship with every single one of my clients. So I would say that is the difference between me and maybe most agents out there. Yeah.
Well, then, since you mentioned that you're in the industry for 3 years now, how did you get started in real estate?
I would say that how I generally started out was because of my parents. Both my parents, now my mom is still in the industry. My dad used to be in the industry. So I would say that from young, it's kind of an influence. So that kind of piqued my interest into the real estate industry as well. So slowly but surely, and I'm in this line.
All right. Well, then, what are your three biggest learning lessons in your career so far that you've had?
I would say that the biggest lesson I actually learned in the industry is that, to put it in a simpler way, is that to in a sense forgo the transactional value first and to really touch base with every single client with on a more personal basis. Like, yes, certain deals the money may be of a bigger quantum, but the money can sometimes get into our heads for certain things. So it's always important for us to really put our clients first before anything else. Yeah.
Right. Okay, so why is it that you want to build a team of competent real estate agents?
I think personally for me is that I have seen how being in the business actually changed lives. Of course, with the amount of quantum that we are dealing in and out every day, I've seen how that money has also changed lives in different individuals. So I myself do want to, in a sense, help people change their lives for the better as well.
I see. Well, then, since you want to build a team, what are some ideal characteristics of an agent to join your team?
I think I would love to have someone on my team that is somewhat like me in a sense whereby we do want to put our best into whatever we do, as well as in a way we are always striving to improve ourselves on a daily basis. And that the sky is just the limit. We really want to push ourselves to be better for us, our loved ones, our friends and family as well.
Right, so let's move on to some questions about property itself. What are some key factors to consider when evaluating a property's location?
I think with my team and everything, all of us, we have this framework that, in a sense, when we help our buyers source out for in what we call a value property, there are four major components that we would really look out for, which is, of course, being near primary schools, being near amenities, transport nodes, and of course, bigger size developments. So the first three, of course, are things that most people look out for. Bigger size development, often at times people do really miss out on this portion. How I'll really summarize in a way is that to look at property prices as being on an escalator, the more people there is on the escalator will move. So hence putting it into a property perspective, when one seller sells at this price, I can't expect the next seller to sell at a lower price. So with a bigger size development, prices tend to move a lot more frequent. Hence, it's a slightly safer kind of development to enter in.
I see. All right. Well, then, how do government policies impact the real estate market in Singapore?
I'll say government policies we have to look into before 2013 and after 2013. So the 2013 cooling measures, the major four kind of government policies that was implemented will be your loan to value ratio now, which is about 75%, your TDSR at 55%, your SSD, which is 3 years before you can actually sell your properties without incurring a tax, and also additional buyer stamp duty. So if you were to look before 2013, how the market was kind of fluctuating is that during your financial crisis, people can kind of just sell away their properties because there was no SSD. Hence, we always see that dip in the market during your Asia financial crisis, your global financial crisis. But with all these measures taken into place, now we see post 2013, how the property market is kind of behaving is that it is relatively on a steady climb, even though with more cooling measures taken into place to kind of make sure that Singapore property market doesn't really increases to exponentially. Yeah.
Does this also include how COVID-19 also changed the market in a certain way?
I would say COVID-19 kind of affects the market more on a demand and supply side. So because during COVID, certain developments, certain projects are kind of withheld. So there was lesser supply in the market. Yet at the same time, there's always demand in Singapore for, in a sense, a demand for property. So with low supply and higher demand, the property prices kind of increase to a certain extent from post-COVID onwards. Yeah.
What are some advice you would give to first-time home buyers navigating the market?
I would say the very important thing in today's market is to, of course, to make sure that your valuation makes sense. It obviously is to, of course, get a bank valuation of the property. If the valuation is a bit far away from what has been the recent transaction price, maybe it's not exactly a property that you might want to enter into if you're planning to exit 3 to 5 years down the road. However, if it's going to be a place that you want to permanently stay forever, I think it's fine as long as this property is something that you truly love and resonate with.
So moving on to the next question would be, is now in 2025, a good time to buy property because interest rates are so high?
Okay, in terms of interest rate, we have to look back to slightly pre-COVID when that was actually the peak of interest rate where it was about 2%. Now it's about 4% and it's slowly dropping. But with hindsight, back then when interest rate was at its peak and when it dropped, the property prices kind of increased exponentially. So now that we have the hindsight when now interest rates are at its peak and it's dropping, doesn't it then show that prices will then continue to climb? Because when interest rates are low, people tend to enter the market. So it's kind of a reflection of the COVID market in a sense. So I would say that there's this opportunity for buyers to kind of enter into the market now.
Well, let's talk about rental income versus capital appreciation. Maybe you could share a gist of what these two terms are in your opinion and maybe which is better.
Okay. I would say rental income, of course, can be, today if you buy any property, rental income is a steady flow of, in a sense, passive income. However, capital appreciation, depending on the property you buy, is also, and many other variables, capital appreciation tends to fluctuate between different properties and, of course, different bedroom sizes. So ultimately, I would say it really depends on what is your end goal. If today your end goal is to, of course, get passive income, I think having a rental income of any property would be fine if the rental within that specific development is healthy. However, if you're looking more towards an investment point of view whereby every 3 years, which is the golden period, every 3 years you do want to flip, then maybe we have to be looking at something like newer projects whereby in history, based on stats and figures, we have seen that, of course, with the previous few the kind of factors that we want to see based on the development, that's when the capital appreciation will be more, I'll say it will play more of a part lah.
So now these next questions will be for viewers to get some advice from you. Would it make sense to stay in the rental while waiting for my new launch condo to TOP?
I would say it really depends on your needs and your wants. If the idea today is to, of course, get that capital appreciation from a new project, and you don't exactly have a place to stay for the time being, then rental is probably the way to go. However, if you don't have your parents' house to stay for that few years, of course, that would be the best case scenario, as you don't have to fork out, in a sense, extra cash. However, in today's context, if I would say that the best case scenario is that you don't have to fork out extra cash. Hopefully your parents are able to help you. If not, I think if you look in the long-term goal, the 3 years of rental versus the potential capital appreciation, which one is more important to you? That is something that I would usually ask all my buyers before they enter into a new project. Yeah.
All right, okay. Then is buying a private property near a prestigious school a good choice?
I think being any primary schools or being near any kind of schools kind of really increases property prices to a certain extent. Of course, as said before, we have being near transport nodes and of course being near amenities. But yes, definitely being near school does puts your property at a certain advantage compared to property that is away from the 1 kilometer mark of primary schools.
Will property in Singapore always appreciate?
I would say that due to the 2013 cooling measures, the government the policies put in place by the government kind of make sure that the property market it's resilient to, be it whether outside other countries' factors, be it war or whatsoever. These kind of measures are taken in place to make sure that property prices actually climb on a more, I would say, steady pace. As we can see through stats and figures so far, ever since the 2013 cooling measures, all the property prices have been steadily increasing.
Right, so moving on to our last question for the first segment. Real estate outlook in 2025. Prices will go up or down?
I would say that there is a bit of uncertainty in the market of how 2025 will go. Of course, we are just in the start of the year. However, I guess based on past new launches that have been coming out, of course, with the recent Toa Payoh new launch and the upcoming Clementi new launch as well as the Tampines new launch, we are seeing this demand in these kind of areas. So property prices might still continue to go up on a steady basis. However, with interest rates, are buyer then receptive to entering the market? That is in a sense a question that, there is much of an uncertainty. However, in terms of the supply in the market right now, I would say that developers are are fearful that their stocks might not sell. So I would say at this current moment it's a 50-50 kind of situations. However, governments always put in policies to make sure that Singapore property prices don't really, in a sense, dip.
Okay, and with that, we'll wrap up part 1 of episode 71 with Jayden. I will see you shortly in part 2. Welcome back, everyone, to part 2 of episode 71 of the GrowCast Show. I'm your host, Belinda, and once again with me is Jayden Lee, an Associate Director of PropNex Realty. Now let's get on to some questions that are more related to the private property sector. Should I upgrade from a HDB to private property, be it a condo or landed property, even though I have to top up cash to pay my mortgage?
I think in today's context, what we really want to really view property as is a form of asset. Upgrading from a HDB to a condo to a landed, I think no matter what, end of the day, if we look at private properties, be it condo or landed, after how many numbers of years that you fully pay your property, if upon retiring you choose to then downgrade back to a HDB, when you do retire, how much money can you then get out from selling your specific asset class? So I would say that should be more of the kind of standpoint that we should be looking when we are looking at properties today.
How can one calculate a proper budget to allocate for their property?
I would say that usually in terms of, it really of course based on your income, a good way to, I would say in a sense, gauge is that for every $1,000 you're able to loan about 100,000. So you can do your math to check about your 75%. And then of course your 25%, if you cash and CPF after paying the initial down payment, how much reserve fund do you then have to, in a sense, last out for the next few months or the next few years? So that is I would say the one of the major kind of considerations that you need to think about. Yeah. Then of course afterwards, when you do move in to your specific development upon TOP, when the interest kicks in, with your reserve funds, how long can you actually last out for? Yeah. If the numbers add up, you can last to more than 4 years. I think that is relatively a healthy number, because after 4 years as well, you're able to, in a sense, sell off your condo or your private property without incurring any SSD. So that is kind of the relatively healthy numbers that we are looking at.
Is buying a potentially en bloc unit a good idea? And is it possible to determine if a unit has en bloc potential?
I would say investing, okay, let's put it in this way. The word here today we are using is investing. So what is your, I would say, risk appetite? And also, what are the chances that a specific development is able to en bloc? After all, being able to en bloc is also the factors to determine is also by the residents staying in that specific development. We have seen cases whereby people buy into an en bloc property hoping for it to en bloc, but yet at the same time for it to not en bloc for the next 20 to 30 years. So I would say if you do want to invest into a safer property, of course, I would say that either the resale market or the new launches are the better way to go, rather than hoping for a chance for your property to en bloc.
So given if someone is willing to take the risk, they are more than welcomed to go ahead?
I would then ask them back the question is, what are their end goals? Is it to in how many years' time do they want to flip out their investment? Is it 5 years down the road, 10 years down the road? I think that is the question that I'll ask back to them.
So what if there are new developments near me? Does that guarantee that my property will appreciate?
I think as said before, how property prices are really determined. If let's say today we have a new development that is transacted at about 2006 PSF, and maybe there is a certain group of buyers that can't really enter that particular development. Hence, they will then go into the resale development in the nearby area. And once there are new buyers entering the specific development, of course, prices may climb depending on development sizes and the demand for that particular development. But I wouldn't exactly say it's 100% guarantee that your property might increase in price due to the fact that there's a newer development that is coming out in the future or nearby. Yeah.
Okay, so if I manage to sell high now, does that mean I'm also buying high?
I would say for property prices, prices are always climbing. So the term, yes, when you sell at a high price, you are of course buying at a higher price. But if we were to flip the question, today's high was always yesterday's low, and property prices will then continue to climb no matter what. So I would say that the longer you wait to enter the market, there will be this point of time where you reach a point in time where you're actually priced out and not be able to enter the private property market anymore.
All right, now I have a few questions when it comes to comparing these property types. So between freehold condo and the 99-year leasehold condo, what are the pros and cons of these two options?
I would say the major difference is that, of course, buying between 99 years and, of course, a freehold condo, number one, there will be a rough 20% premium for a freehold condo as compared to 99 years. And then I would say usually for freehold, it's more catered towards families for legacy planning, to leave from the grandparents to the parents and, of course, then down to the child. So maybe freehold is something that you might be looking to if you are planning for legacy planning. For 99 years, usually we do see the buyer profiles to be more of investors. So not saying that freeholds doesn't have investors, but I would say the bulk of them are more in towards kind of 99 years kind of developments. Yeah, so I would say that is the major difference that you might want to be looking out for.
So what about between a new condo versus a resale condo? Which is better?
I would say that if today a new iPhone 16 and the old iPhone 10 was the same price, which one would you then go for? And I would say due to transactions based on past new launches, we always see that new launches tend to have that steady increase of about 4 to 7%, depending on average. But for resale condos, usually the average growth is about 2% per annum. So I would say it's really it boils back down to the needs and wants. If today your end goal is to just have a place to stay, I would say that maybe resale properties are the way to go. However, if you are then looking for capital appreciation and investment opportunities, I would say that maybe new launches might be the way to go instead.
Okay. Then what advice would you give someone who is deciding between executive condo, an EC, versus private condo?
If you want to base on stats and figures, ECs and condos do make a certain amount of capital appreciations varying from different developments. However, the main difference between both kind of condos, I would say, is really the time taken, to then cash out. For both condos and ECs, usually it takes about 3 to 4 years for it to build. However, the duration that you can take to kind of cash out. For ECs, you need about 5 years before it fully MOPs. And for private condos, it takes about 3 years. So in total, the time taken for it to build and to cash out, what is the opportunity cost loss, between a private condo and also a EC? Yeah. So I would say that is really the main difference that a buyer might want to consider before entering into the market.
Then let's talk about between a big condo unit versus a small landed. Which should I choose?
I would say, okay, let me put it this way in a sense whereby it is the asset class of each different property. I think it's every Singaporean dream to, of course, own a landed. And based on, stats and figures, we do see that, being for landed prices, it has increased a bit more exponentially as compared to private condos. However, in today's context, if let's say you're staying with a family that maybe have elderlies, of course, in landed, you can build lifts and everything, but would end of the day, being in a condo be more convenient for you due to its amenities? So it boils back down to your needs and wants before choosing between a big condo versus a small landed. If facilities is something that you care about, maybe a condo is something that is something that you will prefer. However, if it's privacy that you value, a smaller landed that can fit the same amount as a big condo might be something that you're looking more towards too.
Okay. Are there any new developments in 2025 that you are anticipating, or maybe for viewers to watch out for?
I'll say in 2025's context, for the latter half of the year, majority of the land sales and condos and new launches that are coming out are more in the RCR and CCR areas. However, of course, during this time of the recording, the newest launches that will be coming out will of course be Ela and Parktown Residences. So I would say that these two are the more up and coming ones. Of course, for Ela, it'll be at the last land plot in Clementi, and for Clementi itself, there is a lot of, I would say, if you are someone that is looking towards primary schools, secondary, and then up to tertiary, Clementi is an area that you really should be looking into. Plus, is the last land plot that is available in the Clementi area. For Parktown Residences at Tampines, it is going to be a mixed development. So your malls, your transport nodes will be all in one development as well. Plus, you'll be located in Tampines, which is a township on its own. So I think those are the two most popular new launches that will be coming out this year.
How do you determine a fair market value for a property?
I would say the easiest way to determine whether the value of a property is fair is, of course, to, number one, of course, get an indicative bank value to see whether you are paying whether you are paying too much or at fair value. Number two is, of course, to base on the recent transaction prices of a particular development, whether you are then paying record-breaking prices or you are, in a sense, going into a quantum where most resale sellers are actually going into as well.
Okay. Then what are some signs that a neighborhood is becoming more desirable to home buyers?
I would say that it boils back down to the four factors of whether the neighborhood has amenities, transport nodes, primary school. Those are the three, I would say, major factors that if you do want to enter a development, those are three, in a sense, big factors where one buyer might want to consider to enter into a safe development before they exit in the future.
Could you tell us about the benefits of investing in real estate compared to other asset classes?
I think for investing in real estate is that no matter what end of the day, having to exit with the amount of capital appreciation is one thing. And of course, aside from the money part is of course having a place to stay. So I would say for me myself, I would say it's a win-win situation. You get to stay in your dream home, but at the same time, end of the day, when you do exit, you are exiting with a certain amount of capital appreciation as well.
Okay. Then should I continue to hold on to my HDB for the next 20 years?
I think for HDB wise, the two important factors that we have to look into, number one is of course accrued interest. So for HDB, most of the time, most homeowners are using their CPF to pay. So the main concern here is that once your loan has been fully paid, the amount of CPF that has been used in the unit will still continue to roll. Hence, that's why during the 2013 cooling measures, we kind of see a lot of negative sales from a lot of home sellers is because that they have held their property for too long. Their accrued interest kind of roll too much to the point whereby after clearing their loan and everything, with the CPF coming back into their account, they don't exactly end up with much cash profits. That's number one. Number two, I would say is the amount of buyers that are able to then buy into a HDB as time goes by. So to put it in very layman terms, the number of grants and loan that you're able to get is determined by your age plus the remaining lease for that particular HDB. So if it's more than 90 years, the HDB will be more than happy to give you the full grant and loan. However, as the lease kind of drops as the year goes by, your pool of buyers relatively gets smaller because the age of the buyers have to be older. So there's the two main factors that one should consider, that whether they should hold on to their HDB.
Okay, well, lastly, to end off this show, what's the foreseeable future for the market in the next few years? Should I buy my property now or wait?
I would say a lot of people has always asked me this question: will property prices increase? Will property prices drop? And should I then wait for the future, hoping that prices might go lower? But I would say that due to government policies being put in places, it is very hard for prices to drop. If not, that also means that our government is in trouble. And I'll say that number two is that today's high is always yesterday's low. So the longer that you do wait to get into a property, there's a high likelihood that you might be priced out before going in. So why not enter now and then reap the benefits of most homeowners that go into private property the first time, they are able to then cash out and flip towards that Singaporean dream of owning a landed.
Okay, well, this concludes episode 71 of the GrowCast Show. Thank you so much, Jayden, for your time today and giving great advice and clarity to our viewers. And thank you for listening, and we'll see you again at episode 72.